July has so far lived up to expectations as the best month for the Philippine stock markets. Is there further upside to this rally, or will the dark cloud of the ghost month ruin the stock market's parade? Let's discuss. My name is Den Slim, and welcome to another episode of Monday Market Outlook. The key discussions last week was the dovish tone from BSP Governor Remolona, which had a lot of investors betting on a rate cut this August. But this move didn't come without warnings, as some analysts are predicting the peso to depreciate further to 60 pesos if the BSP cut rates this August ahead of the Fed. But while the August rate cuts are already a given, the peso seems to have kept its composure and even strengthened against the dollar, with the peso breaking through the 58.50 resistance, reaching a high of 58.20 before a pullback to 58.40 to test support. Remember, we are looking at the charts in reverse, so the downward move here actually indicates a strengthening peso. So what's the backdrop of the BSP's confidence for an August rate cut? One, the Fed is pricing around 3 rate cuts this year, while the BSP is only planning for 2. So even though we will be cutting rates ahead of the Fed, they will eventually catch up to us, or maybe even overtake us by December. Secondly, inflation has tamed to 3.7%. And remember that of all the components that make up the CPI basket, of the 3.7%, look here, the 2.3% of that is coming from the food and non-alcoholic beverages segment, and this big column here is mostly determined by rice prices. Now, we are well past El Nino, and with the lower tariff on rice imports, the BSP is projecting inflation to significantly drop by September this year. So with the expectations of monetary easing, the PSEi had another rally last week led by SM stocks, but this time also joined by the Ayala stocks, JGS, and GT Cap even. A quick look at the sectoral performance shows the tech, financials, telecom, and real estate sectors outperforming the PH markets, with consumer discretionary pulling back last week. As if we zoom out further, it was actually consumer discretionary leading the way, with telecoms, real estate, and healthcare outperforming the markets. So maybe the consumer discretionary pullback this week could be a good chance to buy the dip. So let's look at the PSEi charts. Now the PSEi rallied further to our target demand zone here at 66.50. Now we were expecting the index to retest 6,400, but the market got too excited with the August rate cut scenario. And as we punch through these moving average resistances, we have to look into the demand zones to determine some key areas. No? As we have momentum going into this week, we could actually consolidate along this demand zone here before possibly breaking through to 6.8. Or maybe we could get the expected pullback right here before it moves up to 6.8. So we'll see. If we look at the Fibonacci levels also here, the 61.8 Fib corresponds to around the 6,700 level, while the 78 Fib does correspond to around 6,800. So we'll see. Now, who were the winners of the August rate cut storyline last week? Of course, real estate stocks. No? It has been choppy for Ali and SMPH in the past few months, but the rate cut news last week had these two stocks racing to their respective key levels. Ali is back into 29.60 with a high likelihood of it breaking out, after which it looks like a clear path to 32 for a possible gap fill. SMPH, a strong finish for the week, catching up to Ali at the 29 plus level, ending the week at 29.30. Will the third time testing this resistance level be the key to SMPH rallying to the 200 EMA and eventually to 31.85? Of course, AREIT waking up after the rumors of its potential inclusion to the PSE main index. The next key area would be at around 38.50 50 to 39. And finally, RCR, very strong week, entering into this demand zone here. We could probably see RCR consolidating here first, but it's not far off that RCR could reach 592, given that at this level, it will still give out a 6.6% yield versus a potential 6% rate by the end of the year. Now, let's look into the prospects of the PSEi in the coming weeks. Now, if we zoom out, remember we talked about how the corrections during the ghost month is usually preceded by a rally. See here, I pulled back a rally. The correction here was preceded by a rally. We've seen that in previous years. So the question right now is the same thing going to happen to the PSEi this year. Note that the corrections from the previous year can range from 10 to 20%. So that would be a scary scenario for the PSEi to again correct back into somewhere along these levels. Could we reach 6,800 before that happens, right? So what would the correction from 6,800 look like? We could potentially go back here to 6,100 or even here at 6,000, hitting this trend line support. So maybe it is not the right time to get excited yet. Now, if we do break out of this resistance here, that would be a different story. We could hit 7,000, maybe 7,150, and it would break this very strong trend line resistance here. So we'll see. In terms of our timeline, the August rate cut will happen here, and the ghost month will start here. Now, in between August 6 and August 7, we will get the inflation data and unemployment data, respectively. So things can still happen from today until these dates. So we'll see. We'll continue to monitor that. Now, I want to focus this week on three conglomerate stocks. We have AC, AEV, and JGS, particularly because they have been trading at very critical lows. So AC, trading along this area here, it hasn't traded this low ever since the pandemic. So it recently bounced off 566 and is now at 584. Previously, it hit this demand area here and it was not able to recover from there, and it went down sharply to where we are right now. Now at this point, it needs to overcome this resistance area, and then next, it needs to overcome 630. What could help AC break through these resistance levels? We can look at the fundamentals. Let's see what makes up the AC conglomerates, right? The major contributor to AC would be their real estate, the condo business, hotel, and mall operations, right? 146 billion, it's up. Industrial technologies, 74 billion. Their automotive business, Volkswagen, Kia, Honda. Power generation, ASEN. Financial services, banks, BPI. A slowdown in economy apparently has affected their industrial technologies business. 2022-2023 growth not too good. The automotive and power generation business growing. The banking making a killing out of high interest rates. Will the August rate cuts give a boost to the real estate business? Yeah. Will the August rate cuts help their automotive business? Could be. With lower interest rates affecting net interest margins, could this be offset by higher loan availments? Possibly, with the potential catalyst of a rate cut, could overcome these resistances in the short term, but we'll see how it reacts at 630. Next, we have AEV. AEV is at a depressingly low area last seen back in 2021. This could be considered a strong support level, but can this hold? Because 45 actually seemed like a very strong support level, but look at what happened here. Now, the key businesses for AEV would be Aboitiz Power. It's mostly Aboitiz Power. And their food manufacturing business, which is mostly agricultural feeds. Now, look at the revenue for the food manufacturing business. This could have been affected by high commodity prices. Now, WSM prices were artificially low in June. It's going to recover in July. And with the recent price movement of AP, maybe maybe AEV has seen the bottom. With commodity prices also stabilizing, maybe we can see the food manufacturing business gain some traction in the second half of the year. Lastly, foreign selling might already be done. So we'll see how AEV reacts. Lastly, we have JGS. It's trading at prices that we last saw back in 2012. And this is even lower than the pandemic levels. They didn't even close this low back then. Clearly, the trend for JG Summit is going down. A quick look at their revenue breakdown. We have their food business, URC, as their top contributor. Cebu Pacific, Robinson's Land, Petrochemicals. Is the worst over for URC? The recent price action seems to indicate so. Are people traveling more? Cebu Pac revenues last quarter was up 21%. Let's see how their second quarter earnings will be during the earnings season. August rate cuts should benefit their real estate business. Maybe this is the bottom for JG Summit Holdings. We're seeing a basing pattern here. Best case scenario for JGS, it reaches 31.45, breaks through that and retraces here, breaks through for a head and shoulders pattern, reversal pattern, or it could form a double bottom and then eventually break to 34.90 resistance, which could confirm a reversal pattern. Be careful when trading at the lows. If the trend is still going down, there's really no reason for us to believe that it is not going to continue to do so unless we see price action confirming the reversal, right? So look for reversal patterns. In terms of fundamentals, things should be looking good. If you want to enter, make sure you position your stop loss properly and manage your risk, right? On to the global markets. Fed Chair Jerome Powell, in his testimony, continues to look for more encouraging data to justify rate cuts this September. Basically, these were some of the main points of his testimony. The jobs market is slowing down, but apparently it's not slowing down fast enough. And the labor market still continues to be strong. Inflation is on the right path, but we are still looking for the right timing to cut rates because we don't want to cut rates too early, but we also don't want to cut rates too late. But I guess the indication for rate cuts came in on Thursday as CPI numbers actually fell by 0.1% versus the expectations of a 0.1 increase. Now building a better case for the Fed to lower rates by September. Now note that this is the first time that we've seen prices actually go down, a decrease of 0.1. No? So prices went down ever since the pandemic. The probabilities for September rate cut jumped to 84.6% from just 69.7% the previous day. Looking at the broader picture, the 3 rate cuts for this year is still on the table while the market reached an all-time high on Wednesday. The CPI report was a sell-on news as the market rotated out of tech issues into the broader markets. A quick look at the equal-weighted S&P shows a strong move indicating that probably the 493 other stocks in the S&P 500 were the ones rallying instead of the Mag 7. Also, the same case for the Russell 2000 with a 2-day rally to close the week at all-time highs. Now looking into the sectoral rotation, we see money flowing into the solar, regional banks, materials, China tech, utilities, and the Russell 2000, and we see here semiconductors and the tech stocks with a sharp pullback. This week, Q2 earnings report will continue after the banks kicked off earnings last Friday. Some tech names will report later in the week. Not a lot of economic data this week, but the earnings report from this week will give us a better indication of how the US economy did for the first half of 2024. But for now, let's enjoy the rally while it lasts. While it's historically consistent that we do suffer a correction during the ghost month, we still have to look at price action and see if it will still happen again this year. Price action for now is still bullish. In the meantime, we will check how the markets will react to key areas in the PSEi. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.